Hi, everyone. I'm guessing people are still joining, but in the interest of time, and I think maybe we'll just start. So good evening. Thanks for your time. As you know, I'm Kat Kukreja, co-chair of the Blockchain Committee, and we have with us also Emma Pecenicic, co-chair of the Blockchain Committee. And tonight we are here to talk about crime in crypto, navigating the wild west of Web3. Digital currency and crypto assets are increasingly becoming mainstream. And with that, so have reports of financial crimes, hacks, and frauds. But the question we're asking our panelists today is whether the sector is really a hot mess of scams and fraud or a new frontier of decentralized finance. And looking at that as well is the impact that all of this has on the greater institutional adoption of cryptocurrency. With us tonight to discuss these issues, we have Vince Turcotte, Director of Digital Assets Asia Pacific at Eventus, Erie Redboard, Head of Legal and Government Affairs at TRM Labs, and Ian Lee, Director of Global Partnerships at Merkle Science. Welcome, guys. Thank you for joining us. So to kick things off, why don't each of you introduce yourselves to our audience, talk about your companies a little bit and the work that you do in the digital asset sector. Let's start with you, Vince, because you're most known to our audience, likely.
Okay, well, I'm Vince Turcotte, and as Kat mentioned, I'm the Director of Digital Assets for Asia Pacific at Eventus. We're a SaaS firm that is we are a multi-asset trade monitoring, trade surveillance firm that focuses on activity in the case of crypto off-chain, in whether it's in a shared wallet or across a ledger on an exchange. We're the guys who sort of pick up and watch the cash flow and watch the asset flow when an asset comes off the blockchain into a trading environment like an exchange or a hosted wallet or a custodian.
Sorry, Ari?
Sure, yeah, no, thank you so much for having me and nice to see everybody today. My name is Erie Redboard. As Kat said, I'm Head of Legal and Government Affairs at TRM Labs. We are a blockchain intelligence company. So we work with law enforcement globally, we work with regulators. And in that use case, they use us primarily as a tracing tool to track and trace the flow of funds on the open ledger in order to build investigations. We also work with some of the world's largest financial institutions who are sort of engaging with cryptocurrency and want to do it safely. And then we work with some of the largest crypto businesses as a anti-money laundering tool. You know, we are the transaction monitoring, the wallet screening is sort of part of their crypto compliance stack as they're sort of building out their crypto compliance. Really, really great to be with everybody today.
Thanks, Ari. And Ian?
Hi, everyone. Great to see everyone. And as introduced, my name is Ian, and I'm part of the founding team at Merkle Science, where today I lead the Global Partnerships Department. Merkle Science is a next-generation predictive cryptocurrency risk and intelligence platform that aims to detect, investigate, and prevent illegal activities involving cryptocurrencies. At Merkle Science, our vision is that we see the world eventually being powered by crypto, and through the innovative solutions that we're designing, we are creating the infrastructure necessary to ensure the safe and healthy growth of this industry. And together with my amazing team spread across the world globally, we support crypto businesses like exchanges, custodians, financial institutions like your banks, as well as regulators and law enforcement when it comes to monitoring and tracking crypto activity.
Thank you. So we've seen in the report of Chain Analysis, which a lot of us, are reading in the industry, that, of course, crypto transactions have raised and that illicit transactions have risen from 7 billion to 14 billion. So whatever the real number is, apparently they doubled, right? So, given this huge obstacle, can you let us know what is your view in terms of key trends you see in a cryptocurrency-based crime, and and do you think that this is as big as what is happening in the fiat world, or can you draw some perspective there? So maybe we can start with you, Ari.
Sure, yeah, no, happy to. In terms of the numbers, look, I think you're inevitably going to see the actual numbers of sort of illicit transactions go up as the crypto economy has gone up, which has been, you've seen extraordinary growth. I think that what you're still seeing, and I think across the board, analytics companies would say, certainly we would at TRM, that illicit activity remains a very tiny percent, around 1% of the overall crypto economy. But again, you're going to see sort of more and more criminal activity. I think in terms of trends and typologies, you are seeing the proliferation of hacks and scams and fraud. And I think that you're going to see that in any growing economy, right? Those things certainly exist in fiat currency and will continue to exist in cryptocurrency. Just as sort of an interesting aside, TRM and a number of partners, including Circle and Binance and others, yesterday released a website called Chain Abuse, basically a place where people could crowdsource hacks and scams that have occurred to them, and in order to ensure that they don't happen to other people. And I think that part of what we're going to start to see in this new economy is this ability to police itself because of the open nature of the blockchain, because of the ability to track and trace cryptocurrency. I think it's an interesting paradox. The same qualities that make crypto such a force for good, right? Permissionless, decentralized, programmable, value transfer at the speed of the internet, also make it attractive to illicit actors. But this visibility, this ability to have companies like TRM, like Merkle Science, that can track and trace the flow of funds, also make it a great tool to investigate fraud and financial crime. And I think we're ultimately going to see, you're going to see, financial crime continue to rise as the crypto economy continues to grow and flourish. But that doesn't mean the crypto economy is not growing and flourishing.
Thank you. Jan, do you want to share a bit?
Yeah, definitely. So first of all, definitely echo what Erie said. And I must say, I've hugely impressed with Chain Abuse. I've actually signed up myself on behalf of Merkle Science. So looking forward to working with TRM, to build a safer ecosystem for everyone. But, coming back to the question, I think it's inevitable that, the illicit activity involving fiat today is definitely going to overshadow crypto, right? And this is simply just based on the market cap alone, right? That fiat has. Currently, if you look at the market cap of the entirety of crypto, that still stands at, maybe 1.3 trillion. And I'm basing that on, the data, a few days ago, and I know the market has been dipping, so it's now even slightly lesser than that, whilst the US GDP alone is over 20 trillion. Right. And since the US dollar is essentially the standard, the bulk of financial crime that occurs are in US dollar. So, just looking at these statistics, again, I think it's going to be a while before we see the illicit activity on crypto overshadowing what we see in fiat. As for the trends, here at Merkle, at least one of the more common trends that we see is a rise in romance scams and money mule networks. Right. And specifically in the last couple of months, we've also seen a rise in crime related to DeFi and NFT. And it's unsurprising because, when crypto first came about, with the rise in ICO, what we saw was a lot of, new users of cryptocurrencies entering the space. And that naturally led to a lot of, phishing scams and so on, because these new users didn't understand concepts of private key management. They didn't understand the risk involved. And with the rise in interest in DeFi and NFT, what we've seen is an ushering of a new demographic, right, of crypto users. Now you have the creative industry, right? You have people looking to do yield farming. And these are, again, people who are new to the concept of private key, unfamiliar with what are some of the common phishing scams. A lot of people today still commonly get approached on Telegram, for example, right? And if you haven't been in the crypto space for a long time, you may not have learned to, block all Telegram messages from unknown people yet. So yeah, that's at least some of the things that we're seeing here at Merkle. And thankfully, with more and more blockchain analytic firms like ourselves, like TRM, as well as the excellent work at Eventus, we are seeing, better tools that can help tackle the rise of these incidents.
Yeah, I would concur with both Ari and Ian. I think that it's best viewed in the context of the overall size of the market, which is a good deal smaller than 1.3 trillion this week. But look at the growth, for instance, in overall crypto transactions. They were up over 500% in 2021. Well, I'm not surprised then that the number of illicit transactions would double or go up by 100%. So I think that's a good indicator of the fact that, yeah, there are still a sizable cross-section of bad actors. Speaking to Ian's figure of about 1%, there was an interesting study done by Ken Rogloff and his people at Harvard that came up with a figure around 1.5%, you know, in some isolated studies on P2P exchanges. We'll talk a little bit more about that later, but, you know, the fact that crypto is a relatively new environment relative to fiat. Fiat has well-ensconced mechanisms like the ABA network, you know, certainly Euroclear as an asset clearing mechanism, SWIFT, and so on. These have been around for generations. And, you know, each of the regulatory jurisdictions around them is well ensconced, and everybody kind of understands their responsibilities, where crypto is still a relatively new asset class looking for definition of regulations in certain jurisdictions. Well, that's happening. We're catching up a little bit in regulatory finesse, I guess you would say. But the other thing that I would say is that a lot of people have come into crypto from outside of a traditional finance environment. Some of them simply don't know the rules. And, you know, learning what is licit and what is illicit is a big part of our industry responsibility. And webinars such as this, and, you know, and more communication, more education through the various FinTech associations and regulatory bodies is absolutely necessary. It's a growing environment, and it's drawing in people that have never been involved in, you know, in trading or in finance. And that makes it exciting as well.
Thanks for that, Vince, and thanks for that like nice little lead into talking about regulatory review. So, Ari, it's all been teed up for you. From a regulatory point of view, we've seen, especially with the meltdown last week with Luna, that there's a lot of regulatory oversight over this industry, and it's being done at varying levels depending on the jurisdiction that you want to be playing in. Can you give us in the audience here a brief overview of the varying regulatory mechanisms, you know, from a US-centric point, if that's where you're more familiar with, but touching on Asia and Europe if you can, and the likely impact that these may have to greater adoption?
Sure, no, absolutely, and you know, thank you, Vince, for that lead in. Look, you know, I think it's interesting. You know, you mentioned the Wild West, you know, when you in your opening segment. And, you know, in the anti-money laundering space, in this sort of financial crime space that we're focused on today, it is really not the Wild West. When you look around sort of the major regulatory, you know, regulators globally, when you're talking about, you know, the US, UK, the EU, Singapore, you know, you know, these, you know, crypto is a regulated industry when it comes to anti-money laundering. So in the US, for example, you are treated as a money service business, you know, by FinCEN and then by state regulators, licensing bodies, which basically requires that you have robust compliance controls in place. And it is the same thing in sort of other jurisdictions globally in terms of, you know, those ones I mentioned earlier, in terms of getting a license. So that means essentially you are required to have compliance officers. You are required to have policies and procedures. You are, in many cases, required, or it's, you know, strongly suggested as part of your risk-based approach to have transaction monitoring solutions and wallet screenings like TRM, like Merkle Science, you know, like others. And, you know, you are required today to have these types of robust controls. There's no question that things are different when it comes to sort of definitions around, you know, whether certain projects are securities or commodities, or who sort of the primary regulator is in that space. But when you look around globally, you know, the EU is working through MICA right now, which is its sort of comprehensive, you know, cross-country passporting law on crypto, and it doesn't actually speak to anti-money laundering, because what it essentially says is, if in an anti-money laundering space, European regulators should be following FATF, the Financial Action Task Force. And what FATF says is essentially what I just said, and that is, if you are a VASP, if you are a virtual asset service provider, you are required to have robust compliance controls in place. And that means if you're a broker, if you're a custodian, if you're an exchange. So there are definitely areas where crypto is sort of, you know, less regulated, unregulated. But in the anti-money laundering space we're talking about today, really across these sort of key jurisdictions, it is a regulated industry.
Kat, do you want to give some perspective on Asia? I'm
sure.
leaving you to you or anyone.
Yeah, sure. I think that you know, the first thing is that the overarching concern is regulating the platforms rather than regulating the asset class itself. And I think that's important to bear in mind. You see, for instance, with the SFC HKMA joint circular, talking about what's accessible and what's not accessible in terms of a licensed platform, what's available to be marketed to individuals through these licensed platforms, et cetera. The recent testimony in Congress last week with FTX and some of the larger TradFi exchanges talking about customer protections and mechanisms for margin settlement and so on, as well as the SEC's view on cash-backed versus futures-backed ETFs and other derivatives. They're much more friendly to the well-established platforms, the ones that have a clear mechanism for margining, a clear mechanism for their inclusion in the broader financial system. And I think that that's sort of the direction that we're heading. I'm really glad that Erie, you mentioned the FATF, because I think FATF appears, in all of the regulations in Asia. You see direct references to it. So anybody looking to take a cue take away from this, if you're not clear on what your local jurisdiction says, even reading their regulations, fall back on the FATF and the standards that are established there for AML. That's a good guideline, and I'm sure that they're going to continue moving in the direction of adopting FATF standards across the region.
And one just sort of, that's a great point, Vincent, to sort of highlight that even further. Look, there are issues that global regulators have either just touched on lightly or not touched on at all, that FATF has actually sort of built out a lot more. Say, for example, in the NFT space, starting to define, whether certain NFTs are virtual assets for purposes of, anti-money laundering regulation. Or we're just starting to see global regulators talk about decentralized finance. ADGM, in the UAE came out recently with some pretty robust, like a discussion paper on it, which was actually one of the best things I've seen, or the best thing I've seen yet, on sort of a regulator talking about DeFi. Well, a year or more ago, FATF started talking about, DeFi and sort of what your anti-money laundering regulation would look like. So, I absolutely agree. FATF is not a regulator, but regulators take their cues from FATF. And if we're understanding sort of what they say today, I think it's a really helpful sort of crystal ball into where things are headed.
I would compare it to IOSCO in traditional finance, where the standards that are set there are adopted by regulators worldwide.
So thank you both for that. And, just sidebar, but my introduction to digital asset policy was through the FATF paper that came out last year. So, for a newbie, yes, it is highly informative and easy to wrap your head around what they're trying to say. I would encourage everyone on this call to read into that if you can. Let's look at let's actually look at money laundering now, Vince, Erie, and we can see that this is actually the large concern, notwithstanding the FATF papers and the various regulations that we have in place. So earlier this year, 2 individuals notably were arrested for their conspiracy to launder $4.5 billion from the 2016 Bitfinex hacks. So can both of you, in turn, tell us a little generally about the process of following the flow of funds, and specifically how this related to recovering the funds in the Bitfinex hack. So, Erie, let's start with you, because I know TRM has a close link to this, and then we'll move on to
it's an amazing case, and really I think shows the power of the ability to track and trace cryptocurrency and build investigations, and maybe why sort of crypto is not such a tremendous, money laundering vehicle. So essentially, in 2016, you had a hack of Bitfinex. It was $70 million in cryptocurrency at the time. And really over the course of the next 5 years, we saw that money, laundered in relatively small amounts, across blockchains through obfuscation techniques like mixing services, darknet markets, anonymity enhanced coins like Monero. We saw them move the funds by automating transactions, in other words, programmatically moving funds in order to launder them. But ultimately, law enforcement was able to use tools, blockchain analytics tools, like TRM, like Merkle Science, to track and trace the flow of funds, and ultimately identified a wallet address where much of the funds still remained, and they were able to ultimately seize those funds back and actually make an arrest. Which is quite extraordinary. I was a federal prosecutor at the U.S. Department of Justice for about 11 years, and I can tell you that never happens. It certainly never happened to me. Most of the time, you're dealing with North Korea state actors who are hacking exchanges, or Russian cyber criminals, and there's no capability to extradite those types of actors. But what you saw there in the money laundering, I think this is sort of the important piece, is that they were concerned throughout that time with being arrested, because they were actually able to off-ramp very, very little of the funds ultimately, because they were so worried about being caught. And I think it just sort of shows, for this purpose of this conversation, sort of, look, two things are very, very hard. It's hard to move large amounts of funds in cryptocurrency because the world is watching. And it's not just law enforcement, right? It's this sort of, Twitter, crypto Twitter, crowdsourcing, chain abuse type of, self-policing. But the other piece is it's really hard to move large amounts of funds off blockchains because of the sort of regulated entities, the VASPs that have compliance controls in place. Everyone was watching the addresses that were marked in tools like TRM as the Bitfinex hack. And it was very, very hard to move those funds. So I think, look, it's a story of, to me, how you build investigations in cryptocurrency in ways that were never possible before. The lead case agent is a guy named Christian Chesky, who is now heads up our global investigations team at TRM. And Chris came up as a IRS agent. And people all the time ask, like, IRS, aren't you guys supposed to be like, ensuring that people pay their taxes? And what he always says is, look, financial crime is financial crime. And in the Bitfinex case, what you see is just watching the money, right? Following the money in the same ways that we've always done it, but now we get to do it on blockchains.
Thanks. Vince, do you have anything to briefly add to that before we move to the next question?
Sure. Yeah, I think you asked in the first question about trends in money laundering, trends in crypto crime, and one of those is because people like Erie and Ian have gotten so good at following things across the chain. One of those trends is trying to extract money through using traditional exchanges, using either P2P crypto exchanges or normal crypto exchanges that have an order book, an open order book. So all of the the peeling of dropping of little bits of that of Bitcoin into each of these environments, was tracked carefully across those exchanges. And then they would try to extract it either through chain hopping, by pulling out another type of crypto, or by conversion to fiat, and then a deposit into a normal a regular bank, a TradFi bank. All of that sort of stuff we were able to track as well. Our systems, or along with some of our peers, are able to watch that, and coordinating with firms like TRM, where we take their wallet scores and coordinate and take them and coordinate them with the accounts that are available off the blockchain on the ledger. Then that's the role that we saw, and that firms like ours had a hand in through tracking it.
Kat, I don't want to take your job, but Adam had a really good question that I think flows.
I saw that question and I was going to ask it to you right now. So
awesome.
let me read it to the audience so everyone knows it,
Okay.
and then you can answer that, Ari. So the question asked by Adam is, he understands that for friendly jurisdictions, as we've just discussed, it's very hard for bad actors to get funds out of crypto and into fiat or otherwise useful money. But the question for participants is, how do they feel about Russia, North Korea, or other less easy jurisdictions? Do you think crypto gives an outsized advantage to actors in those countries for things like ransomware? Over to you.
Yeah, no, it's a great question. I think important. And I think that the answer on the Bitfinex case was in some ways too easy, because you're talking about, actors who were in the United States, who were susceptible to jurisdiction, who are actually, for the most part, trying to off-ramp funds at large exchanges in places that there was compliance controls in place. And maybe in some respects that made them bad money launderers. But, look, there are certainly non-compliant VASPs, across the globe. And I think what you've seen from, OFAC and UK authorities as well, which has brought sanctions against these entities over the last, few years, is that regulators and law enforcement have gone after that sort of illicit underbelly of the sort of larger growing crypto economy, and have specifically targeted, I think, the places we're talking about here. For example, OFAC has brought actions against 3 cryptocurrency businesses. The first called Suex, the next called ChatX, and then Garantex, all Russia-based non-compliant VASPs that, because of their sort of lack of compliance controls, we're allowing, oversized amounts of illicit activity, whether it's ransomware, sanctions evasion, to flow through those exchanges. And that was sort of, one area. If you look at kind of the other areas, another would be darknet mixing services. And when I say darknet mixers, I'm talking about mixers that are advertising on the darknet as a way to launder funds, the proceeds of illicit activity, narcotic sales, and others. The Department of Justice has arrested the administrators of 2 of those sites and has brought actions against them, one called Helix, the other called Bitcoin FTAHK. And then finally, you see that sort of trifecta is what I think of as darknet markets, right? Taking those sort of marketplaces where the crypto is the means of exchange out of the ecosystem. So Alphabay, Hydra most recently. So we do see regulators going after the types of entities, I think, Adam, that you're worried about. But at the same time, look, North Korea, for example, has built a extraordinary cyber capability. This is a country that is essentially the size of a banana republic in an economic sense. And yet they're playing on the digital battlefield with the US and China and others. So the reality is that you're going to see bad actors try to take advantage of the crypto economy. But at the same time, it's those illicit sort of corners where you see regulators, going after. But it continues to be a real problem. I will say that thankfully, there's significantly less liquidity in places like SUEX and ChatX and Garantex than there is at Binance and Coinbase and FTX and Gemini and Kraken that have compliance controls in place. And I think that's certainly a good part of the narrative.
Do you have anything to add to that, Ian? You've been quiet.
Yeah, I mean, fellow panels has been, contributing such great opinions. I was actually just sitting back and listening and, learning a lot. But what I will say about it, I think, is that there is definitely an advantage to these bad actors, right? And it's an advantage at different stages of their money laundering process, right? On the one hand, where we see a distinct advantage is definitely from a collection standpoint, right? Previously, before the use of cryptocurrencies, with things like ransomware, it became quite difficult for bad actors to, receive payment for those ransomware, because oftentimes if you ask for a bank transfer and things like that, there is a very clear paper trail. Whereas with the introduction of cryptocurrencies, it's now much easier for anybody in order to pay the ransom, because when you initiate cryptocurrency transactions, at least before the introduction of the travel rule, there was no need for you to identify who you were sending to, right? And so what that meant was that anybody could fall victim to one of these ransomware attacks. And in the when it came to paying the ransom, right, none of the typical AML controls within banks, will fall into place to try and catch it. However, on the flip side, what it also means is, if transactions are being done on the blockchain, then companies like TRM, like Merkle Science, can then be called in to track it. So I think, there are two sides to it. Yes, there's a distinct advantage given to them, but on the other side, the data that's being made available can then also be used more effectively to apprehend these bad actors. Now, all that being said, I think we must also recognize that today it's a lot easier to identify these bad actors in many instances because the world doesn't yet revolve around cryptocurrency, right? So oftentimes they are forced to interact with a centralized entity, which may then contribute to disclosing who they are. But as the space evolves, this is where regulation plays a very important role, because if regulation doesn't close the gap and, this space evolves such that anybody is able to transact cryptocurrency without any kind of oversight, and these bad actors no longer are reliant on cashing out or converting their crypto on these centralized entities, then we'll lose a very vital way of identifying them.
Thank you, Ian. You touch a bit around, identity, anonymity. Can you explain a bit to the audience how you able to track, from one wallet, to the identity of a person in order, to pinpoint who they are, and especially, this in certain investigation, like the one of the Bitfinex, Arid said, right? That's how you manage to catch, the criminals, right? So how does that happen?
Sure, I'm happy to share. So first thing that I'll say about this topic is that cryptocurrency is not anonymous, right? Contrary to what a lot of people read on the internet, again, I reiterate, cryptocurrency is not anonymous, but rather it is pseudonymous, right? And there's a very distinct difference, When we say something is anonymous, we're saying that, there is no way for us to identify the person. But when we say something is pseudonymous, what we're saying is that they're operating behind, a masked identity, right? Who actually shields who they are. And in the context of crypto, what users are hiding behind is their wallet addresses, right? Which is that, long alphanumerical character, or otherwise known as public keys, which people use to receive their cryptocurrencies. And in the absence of additional information, it can be near impossible to identify who controls a wallet address. Now, thankfully, cryptocurrency wallet addresses don't exist in isolation, right? And they serve a clear purpose, which is to store and transact digital assets. And because these wallets are used for transactions, by analyzing these transactions, blockchain analytic firms like Merkle, like TRM, are then able to start de-anonymizing these wallets and who controls them. Now, this is typically done by analyzing the wallets used by the bad actors and analyzing the transactions conducted with these bad actors to find interactions with known entities, which hopefully are able to then provide insight as to who their customer is that controls the wallet. Now, usually this is in the form of a centralized exchange, and ideally an exchange with proper KYC procedures, as well as located in a cooperative jurisdiction. And I say that because, we have worked on a number of cases where the funds get moved into an exchange which does KYC, but is based in a country that's not very cooperative when it comes to, issuing subpoenas. This is one of the reasons why, regulators around the world are quite anxious to regulate as many of these VAS as possible, so as to provide law enforcement agencies with more data points that can then be used to identify, who controls these addresses. And the unfortunate reality, though, is that the current standards of KYC, at least, are not evenly distributed across the ecosystem. Whereas, we see some exchanges collecting way more information than the rest, whereas others, barely collect anything at all. And finally, aside from then, looking at interactions with exchanges, we've also been able to identify individuals through, things like online posts, social media, where you'd be surprised to see the number of people who boast about their wallets or post their wallets, when participating in certain events like airdrops.
Interesting.
Yeah,
So
I would kind of add to that a little bit that going back to the Bitfinex hack and the forensics done there, you could easily see the exchanges, the VASPs that did their homework on KYC versus the ones that did not. And there were a handful of them, 3 actually, that did an excellent job with it and were able to catch these guys in mid laundering and shut off their accounts. Even before the investigators got more deeply into the forensics and identified the wallets.
So I'm guessing, just from what I've heard here, is that if you were involved as a third party to any litigation, you can't just sit there and go, "Oh, it's crypto, I don't know who I'm dealing with," because people are going to come to you and go, "No, we can figure it out. Go to TRM and go to Merkle."
Right. So you have to know, but what Ian said, and it's a really important point, is that tools like Merkle, tools like TRM, we do not associate individuals with those alphanumeric addresses. And, we don't show in our tool, this is Kat's address. And we don't make any effort to associate Kat with that alphanumeric address. When that happens is, through great police work that is beyond the use of these analytics tools. It is serving legal process on a cryptocurrency exchange, like Ian said, that has the KYC or, to gain that type of insights or information, or really, I think sort of much of what Vince does, right? Like is, taking that on-chain data that you have there and then going off-chain and investigating to sort of, extrapolate from there. So that is sort of an important point, that these tools are very, very powerful, tracing and tracking the flow of funds on the blockchain. But when you talk about sort of like making an investigation, making an arrest, tying an individual to an address, bringing a sanctions action, it always requires like significant off-chain investigating, sort of the great police work that we've seen from investigators for years.
Thanks. And nice segue back to Vince there, Ari. You guys are like playing tag team really well. So let's talk now about sanctions. Vince, can you tell us a little bit about how a sanctioned individual or entity could look to use crypto to sit there and evade sanctions?
Yeah, I think it's interesting. I mean, Ian spoke at the beginning a little bit about muling, money muling, and there's a fairly common technique where a sanctioned individual or an individual operating from a sanctioned country can collusively work with someone who is not, or set up an entity who is not sanctioned, and then move money across the exchanges. And that goes back to the KYC function and the general umbrella of AML and investigation to figure out who that is. But really, it's a fairly simple operation for certain players. That Rogoff paper I mentioned earlier, they reviewed 45 million transactions from one of the largest P2P exchanges, and they took a look at it and said, well, look, we found probably 7% of these were to move crypto across borders, and about 1.5% of these were to evade sanctions. Well, that's a pretty high figure, whether you relate it to fiat transactions or not. And it's interesting, but it's really as simple as opening up an account. Let's say I'm in Venezuela, for instance, and I want to get money into the United States, and I'll open up an account with a P2P exchange or any other exchange for that matter, and I'll have a collusive actor on the other side. Perhaps even in my own name, I can open an account in the other side of the trade, and I just have those two accounts trade against each other until I've moved, assets across using crypto assets to move it from wallet to wallet or from individual to individual. And then I off ramp it either using crypto or using fiat. That's the simplest way to do it. And they found that there's an alarming number of transactions happening that way. Now, if you look at what the actions that China has taken sort of to crack down on the use of crypto altogether, it was because there was a lot of this going on. I think if you took a poll of people on this call and said, how many of you have had a friend ask you maybe could they borrow your crypto wallet, or could you buy some crypto for them, or could you sell some crypto for them? There'd be more than one or two that would say, yeah, I've had somebody approach me about that. That's what muling looks like. And most people who get engaged in it aren't even aware because the transactions can be layered so many times. It can go from 3 or 4 legitimate people into one illegitimate and then out the door. So it's a process whereby, again, you have to have off-chain analytics, the ability to monitor transactions that happen on an exchange venue and off the blockchain in order to track.
I feel like Vince may have just done a how to evade sanctions using
crypto segment. Yeah. Don't try this one at home.
Yeah. One sort of thing that's really interesting that is just sort of ripped from the headlines in the last week or two is, though, I will say that we are seeing regulators use tools, analytics tools in real time to bring sanctions actions. And that is unprecedented. This has never happened before. So for example, global authorities, Treasury, FBI, others were able to tie Lazarus Group, North Korea's state-sponsored hacking group, to the Ronin blockchain hack, arguably crypto's largest hack, $625 million, about a month or so ago. And what you saw then is what you really saw is OFAC put one of those alphanumeric addresses on the OFAC sanctions list associated with Lazarus Group. There was no announcement, there was no press release, there was no conversation. And I monitored the sanctions list. I looked at it. I saw that for the very first time, a crypto address was associated with Lazarus. I put it in TRM, and quite frankly, it took my breath away to see that, all right, they've now associated the largest crypto hack with a nation state actor. But then you saw them start tracing, right? And as those funds flowed to other addresses, those addresses also became sanctioned by OFAC. And a few days later, we saw funds flowing through mixers like Tornado Cash, like Blender.io. Well, then we saw Blender.io get added to the OFAC sanctions list. And, when I was at Treasury, I spent about 2 years at the Treasury Department sort of working on these types of issues. And I will tell you, it could take months or maybe years for conduct to occur and then for sanctions to come in response. And to see a regulator using these types of tools in real time to bring economic sanctions on a nation state actor is really unprecedented. And an only in crypto story, right? This doesn't happen when you're dealing with networks of shell companies and bulk cash smuggling and hawalas and real estate and art. It's only in crypto, and that's what we're starting to see now, these capabilities. So I think to Vince's point, like, yes, it is, you can do it, but we can also trace it. And that's a very interesting sort of thing that we're seeing today.
I would say
you're just closing out that lesson, right? Don't do it, because if you do it, I'll find you. That was the message.
Exactly.
That was
Yeah.
He's
Watch your
protecting
back.
Vince, because if somebody does it, they're going to say, Vince taught me how.
Oh, come on.
And then,
I would say there's
there's
an interesting asterisk to what Erie was just saying, in that it's only in crypto for now. I think that the coming digitization of a lot of the different asset markets, the advent of CBDCs, you're going to see a whole lot more activity monitored through blockchain. And so we are actually, in this asset class, we're sort of paving the way. You can use the example of the CBDC, for instance, in China, to see how they're applying it across, a myriad of economic functions, not just following up on, on financial crime, but the ability to trace transactions across the economy is really important for them. And once you start seeing more and more trading and more transactions go digital, including CBDCs and other well-established asset markets, you're going to be able to see a whole lot more transactions traced across the blockchain. So it's really going to be much more efficient in the future. And it's going to revolutionize the way we do all kinds of business, not just here in crypto.
Thank you. It's good that you're talking about the other type of assets, because we wanted to jump on NFTs. So, there's a lot of plagiarism and theft and, allegation that NFT are basically, a tool for, wash trading, money laundering, tax fraud since the rise last year. I mean, all the, headlines were there around NFTs. So, what steps do you think can be taken to minimize the risk of criminal activities associated with NFT? And then maybe we can take this from the look of the purchaser, as well as from the perspective of the NFT platform. So Ari, do you want to start with?
Sure.
NFT?
Yeah. No. Happy to. No. Look, I am a huge fan of the NFT space. I think it is innovative. I think we're just starting to see the very, very first use cases. And I'm not afraid to say, I have two little boys. We geek out over NBA Top Shot together. We get in the queues. We open the packs with all the music and everything. And, I've totally bought into the space, but I think it's really the first use case. This is just an experiment when you're talking about sort of digital collectibles, right? I think we're moving to a world where you can have your medical records, hashed to a unique place on a blockchain, right? I mean, I have no control over my medical records today. It would be fantastic to have access to them in that way. Your real estate deeds, your, document review in a legal case, right? Like, I think there's so many interesting use cases of why we'd want, things hashed to a unique place on a public ledger. I think none of those examples, are virtual assets, under sort of FATF's definition. But I think what FATF has said, and I think it's probably a good, place to sort of jumping off point, is that digital collectibles, that are not used for payment, that are not used as an investment, are not virtual assets, meaning you do not have to have compliance controls in place. But, and this is like the huge but, like capital B-U-T, if you can use them for payments, if you can use them for investment, to me, if you can use them to transfer value, then they very well could be a virtual asset. And what FATF is saying, look, is if you can move something at the speed of the internet, it's a money laundering concern. And I think then you start to sort of analyze and analogize to cryptocurrency and sort of the regulations that are in place today. And I will tell you that if you look at like the large NFT projects like OpenSea, Autograph, Dapper Labs, they have compliance controls in place. OpenSea uses TRM, to monitor transactions. We trace and track essentially every NFT today. Based on sort of token standards. We cover the Solana blockchain, the Ethereum blockchain. We're able to trace and track the flow of NFTs the same way you can cryptocurrency. And I think that sort of, look, it's a lot of the same conversation that we've been having today around NFTs, that yes, there's a money laundering concern whenever you can move anything at the speed of the internet, but regulation is either here or coming in the space, but the tools are also in place to sort of track and trace the flow of funds.
Yeah, I think I'm glad that you spent the first part of that comment talking about more practical applications of the technology than the Bored Ape Yacht Club. China has sort of begun to redefine the concept of ownership on personal identity by using NFTs for everything from university degrees to auto licenses to driver's licenses and things like that. And I think going forward, that's going to be the real revolution. We're going to see the NFT technology applied in some incredibly diverse and interesting ways. But right now, I mean, as we're talking about financial crime, I think for me, the biggest thing is to look at the valuations. Wash trading is probably the biggest concern from where I sit. And if you and I decide that we want to, and again, this is not part of my class on how to launder money, but if you and I decide—
Stop teaching that class.
If I put an NFT up for sale and I call you up on the phone and I say, hey, I think that's worth about $40 million, and you send me $40 million, then you and I have just created financial activity and created a valuation on an NFT. Then I can take that NFT, or rather you bought it from me, you can take it and go and use it as collateral, for instance, on Bitcoin trading or other assets. So then it does become something that can present contagion across the system, which is why it needs to be focused on. That the idea of artificial valuation through wash trades, or what we on exchange refer to as money pass transactions for use for money laundering, is a real concern. NFTs are not liquid, of course, compared to standardized assets like cryptocurrencies, and they invite things like money pass transactions, where two people can agree on the sale. In traditional finance, we'd call it the sale of a non-specified asset, which generates X amount of cash. So I could sell you this pen, and say it's worth $100,000. You could give me $100,000, and we've just created a money laundering transaction. You can do the same thing with NFTs. The concept of their value is very nebulous. And, so there's a certain number of these transactions that do fall into the area of money laundering. The bigger concern, though, and I'm sorry to be redundant about it, but it's important. The bigger concern is that valuation then becomes collateral for other transactions. And that collateral could then present a risk to the broader system. So it's something really to keep an eye on there. And that's, to me, the most concerning element of financial crime in NFTs right now.
So it's really the peer-to-peer transaction, right? Where you can be able to do wash trading. And I know this is what the FATF as well wanted to, focus on, peer-to-peer transaction, right? So, so basically
any auction-based environment, yes, I think you're right. Peer-to-peer transactions are a large concern, but any auction-based environment, if I put it on an exchange and I collusively set up a trade with somebody else, then I've done the exact same thing. And in fact, all that better, because that public value of $40 million is now available for the whole market to see, and then I can use it as collateral. The Singapore High Court the Singapore High Court today blocked the movement of an NFT that is one of the Bored Ape Yacht Club pieces, and it was used as collateral for other trading. And now that's going to present a concern to the general market. Like what collateral, what trading, what was this loan used for? That's something that I think people need to take a much, much sharper focus on. And you're going to see a lot more in terms of regulation around that.
Jan, do you want to share some perspectives on NFTs?
Well, I think, Erie and Vince has covered most of it, especially, from the perspective of what platforms can do. Maybe I'll talk a little bit about, what purchases of the NFTs, can look at. And I think, one of the biggest reasons I see today people falling victim to, NFT scams or, money laundering operations is the lack of education, right? A lot of people today still don't really understand what it means to buy an NFT. To use a very, very, very exaggerated example, here at Merkle, we've even had instances of people coming to us saying that, hey, I've been scammed out of my NFT. I bought, these 5 lovely NFTs. I paid, 2 Bitcoin for it. And I can no longer see it in my wallet, right? And, through extensive questioning, what we found out was, what the guy bought wasn't even an NFT. What he bought was a series of JPEGs, right? Which he thought was on an NFT because he had no idea of the concept of how blockchains work, how you can verify, on the blockchain through a smart contract, whether or not the NFT that you're buying is legitimate. Right. So I think, the first thing that I always tell people is if you want to get into the crypto space, be it DeFi, be it NFT, first thing you got to do is educate yourself as to the risk, right? What is it that you're buying? How are you purchasing it? How are you holding it? Right. Because that is really, I think, the first step and what will go the furthest in terms of, at least consumer protection.
Thanks, Ian. And I think you've actually just answered the next question, which is our last scripted question before we go on to the multiple questions that we have from our audience today, which is basically how you would advise our audience to position themselves against being caught up with criminal activities. Now, your answer just now was specifically related to NFTs, but I'm going to work on the supposition that that's general advice for all digital assets. Feel free to elaborate, and then we'll ask Ari and Vince, and then move to audience questions.
100%. So yeah, my answer to this would be the same. I would start off with education, right? As much as I want to tell everybody on the call to just buy Merkle Science and you'll be covered, it's not enough, right? I mean, it's not enough, right? Compliance teams today, within organizations, they need to go through training to understand the space, understand the unique risk, and understand how to interpret the data, that blockchain analytic tools can show them and present to them. This is why at Merkle Science, aside from all the wonderful tools that we've built, we've also heavily invested in our institute arm because we recognize the need to educate, users, right? Educate the industry. And it's only after education, can businesses then start thinking about equipping themselves with the necessary tools, right? Blockchain is great. It gives users a lot of data, but that in itself is a problem, right? Because the amount of data cannot be manually analyzed. And this is where companies like Merkle Science, TRM, Eventus comes in, right? Being a new space, it is also not uncommon for companies to use multiple vendors because, different tools would have different strengths. And again, this is why the education piece is important in helping these organizations evaluate and choose the right tool that suits, their business needs.
Great, thanks. Ari?
I know we only have a few minutes left. I thought that was a terrific answer all around. I think so. I'm gonna let Ian drop the mic on that one, and happy to sort of jump into questions.
Great, Vince, are you okay with that as well? If we move to the
sure.
audience,
I think the only thing I would add is that the more exchanges that I talk to, the more convinced I am that very few of them have thought through a comprehensive solution. So they haven't really looked at everything. I mean, in pieces they have, but not really as an end-to-end compliance exercise. They've looked at from the on-roading of fiat to crypto, all the way through blockchain transactions to off-chain transactions in a ledger-based environment, back to fiat. Whether it's looking at monitoring the chain, monitoring in my space, which is on the exchanges, or monitoring in between VASPs via the travel rule. I've run across, I think Ian mentioned, there are so many different disparate systems that do different things, and compliance departments are scrambling to keep up with it, to try to make sense of all of this new technology as the technology that they're trading continues to change. What I would recommend is that the human factor needs to step forward above and beyond the technology and apply some basic operational risk management principles. Think through it carefully and design a compliance structure that will work with you, not against you.
Thanks, Vince. We'll now move to scripted questions. We have quite a few. Emma, who's going first?
So I think we have one from Ron. So thank you, Ron, for all your questions. With regards to enforcement, how should people ascertain which jurisdiction have standing and are most, appropriate? So, is there a way to make you, more comfortable with all, the compliance and your AML KYC aspect of things?
Yeah, I think it's critical that, if you are an exchange, if you are a VASP operating in a certain jurisdiction, that you, ensure that you understand sort of what are the regulations. I think that's where this question is going, that you understand the jurisdictions in whatever jurisdictions you're operating in, even down to in the United States, for example, the state level. The New York Department of Financial Services, for example, has very different requirements than they do in Wyoming. And it's really critical that you have expertise on the ground in those places. All the time we have clients, cryptocurrency exchanges and others who come to us because we're their sort of compliance solution, say, hey, what is the risk-based approach I need to take depending on what jurisdiction I'm in? And I have really developed a group of tremendous lawyers globally who can really sort of come in and advise exchange on the right risk-based approach, on the right compliance program in whatever jurisdiction they're operating in the world. But it is critical to sort of bring in that expertise in order to ensure that you're meeting those obligations. Look, I think the nature of crypto is global, it's cross-border. But I think unfortunately the reality is we're not anywhere near, and probably never will be, some sort of, UN style global regime for cryptocurrency. And there are going to be differences, across jurisdictions. And it's just critical to understand those nuances so you don't sort of get sideways of a regulator.
That's an excellent point. And, what I find intriguing is that there are several exchanges across, operating across multiple jurisdictions within the same platform. And so when we go in and we set up controls and alerts and so on for these exchanges, we have to help them categorize by, like what is a wash trade in one jurisdiction might not be a wash trade in another jurisdiction. What's legal in terms of all different types of trading styles. One jurisdiction might categorize that as a market manipulative trade, another one might not. So they have to be very, very careful, and as Ari says, to monitor across jurisdictions, but we try and focus it down by segmenting client bases and segmenting the calibration of various alerts to account for that.
Thank you. Let's move to the next question. And this one is from Nat C. And the question asked is whether any of the panelists have insights on transaction monitoring, specifically relating to DeFi privacy coins, for example, Zcash or Monero. Ian, do you want to take this one?
Yeah. So, I mean, we've done a lot of work in looking at DeFi privacy coins. And the reality is, these privacy coins are designed to be privacy centric, which means that oftentimes most, if not all, of the transaction information is blocked. And so most of the time, the success that we get with these DeFi privacy coins usually have us relying on a combination of limited on-chain information, but a bulk of off-chain information, right? It's also important to recognize that, not all privacy coins are designed the same, right? So depending on which one they use, again, the success can differ. But from a business perspective, I think it's also important for businesses to recognize that privacy coins are seen as higher risk in most jurisdictions, with some jurisdictions outrightly banning it, right? So yeah, that's at least our experience with the DeFi privacy coins. Happy to hear from the rest of the panelists.
The only thing I would add very, very quickly is that look, there are obfuscation techniques that bad actors are going to use, and frankly, good actors are going to use, because in a world in which we have more and more transactions in an entirely open system, people are going to want varying degrees of privacy. So you talk about mixing services, you talk about anonymity enhanced coins, privacy coins, but the reality is we're still seeing cases, investigated and prosecuted where people are using these types of techniques, which means, a couple of things, that there are capabilities around privacy coins. And to Ian's point, they are different, and there are different ways to sort of track and trace them, and tracing through mixing services. So they're obviously, these things are happening out there as people build investigations, but it will continue to be a cat and mouse game.
Okay.
Vince,
last comment or?
Oh, sure.
I know Ari has a hard 7 stop.
Oh, okay.
So you have 10
them.
seconds, Vince, or we can just end this.
10 seconds. And I this may not be a popular view in the crypto crowd, but I believe the privacy coins are going to go the way of the dodo. I think that Ian had mentioned that several jurisdictions have banned them already. They have one purpose and one purpose only. And I think that you'll see more jurisdictions joining in the banning of them. So they'll become so limited use that they won't even be useful as a laundering tool eventually.
Thank you, Vince. Thank you, Ari. Thank you, Anne. Thank you, Kat, and everybody for being here tonight and sharing your expertise. Next committee next month will focus on algorithmic stablecoin and maybe more as well. We hope you will join, and we found today's session really interesting. And thank you again.
Thanks, everyone.
Thank you so much.
Thank you, everyone.
Really enjoyed it. Thank you.
Speak to you all soon.
Yep.